is a stock? Let us examine as what is a stock. At the point when an individual possesses stock in a company, the individual is known as an investor and is qualified to claim part of the organization's remaining resources, that is, assets and profit, should the organization at any point need to break up. An investor may likewise be alluded to as an investor. The expressions stock, shares, and equity are utilized reciprocally in current monetary language. The securities exchange or the stock market comprises of trades or exchanges where investors can purchase and sell shares of any company. What are stocks, shares, and equities? Stocks, shares, and equities are terms used to figure out units of ownership in one or more than one companies. The owner or the proprietor is generally known as a shareholder who will receive payments of dividends as well as voting rights if the company grants them so. The terms are often used at each other's place, but there are some minute differences between stocks, shares, and equities that can be confusing. Stocks is generally used to refer to portions of ownership of multiple companies. For example, you may say that you own stock in Apple and Microsoft. Shares usually refers to ownership units in a specific company. For example, you could say that you own 10 Apple shares. Equity is the term for a gross ownership stake in the company. For example, if a company had 1,000 shares and you own 200 of them, you could say that you held a 20% equity stake in that company. Definition of stock. The term stock is used to describe the ownership certificates of any company. A share, on the other hand, refers to the stock certificate of a particular company. Holding a particular company's share makes you a shareholder. Description. There are two types of stocks, common and preferred. The difference is while the holder of the common stocks has voting rights that can be exercised in corporate decisions, the preferred doesn't. However, preferred shareholders are legally suitable to receive a certain level of dividend payments before it can be used to other shareholders. There is also something called convertible preferred stock. This is a preferred stock with a choice of converting into a fixed number of common shares, usually any time after a declared date. Now the question arises, why do people buy stocks? Well, the answer for that is investors buy stocks for various reasons. Capital appreciation, which occurs when a stock shoots in price. Dividend payments, when the company distributes some of its earnings to stockholders. And ability to vote shares and influence the company. And now let us see, why do companies issue stock? Companies issue stock to get money for necessities, which may include paying debt, promoting new products, horizoning into new markets or regions, enhancing facilities or building new ones. How to buy and sell stocks? One can buy and sell stocks through a direct stock plan, a dividend reinvestment plan, a discount or full service broker, or a stock fund fees? Well, buying and selling stocks does have fees. A direct stock plan or a dividend reinvestment plan may charge you a fee for the particular service. Brokers who buy and sell stocks for you ask a commission. Now let us see what are bonds. Bonds are certificates which promise to pay a fixed rate of interest. A person who buys a bond is not buying ownership in a company but is lending the company a sum of money. The bond is the company's resolve to repay that money at the end of a certain period of time, such as 10, 15, or 20 years or more. Vis-a-vis for lending the company money, the bondholder is paid interest regularly. The interest rate is based on general interest rates in effect at the time the bonds are issued, as well as on the company's financial strength. The bonds generally pay more money than preferred stocks do, and they are usually considered a safer investment. If a company goes bankrupt, bondholders are before both preferred and common stockholders. Various levels of governments also issue bonds to help pay for various projects such as roads or schools and public projects. The interest the bondholder receives from state and local bonds, also called municipal bonds, is exempt from taxes. So this might have given you a fair idea as to what stocks, shares, equity, and bonds are. And yes, don't forget to subscribe to the channel for future learnings. Thank you.